Stocks our strategists feel are poised to deliver positive returns are featured now in their top stock picks of the week.
Hi, Shiraz Mian here with the Zacks top stock video. Joining me this week will be Kevin Cook. Kevin and I each have one individual stock that we're excited to share with you. The stock I'm talking about is Citigroup. Now, I have a few slides that I want to share with you, and this first slide is showing, as you can see, Citi versus JP Morgan, Bank of America, and the S&P 500 index over the past year. As you could see, Citi is way ahead of everybody, including the team leader, JP Morgan. So a strong performer. But the one thing you can take away from my spiel about Citi is that this is just the beginning. Citi is a very cheap stock, and this has been a perennial laggard, particularly in the big money center club after many, many years. And it goes back to the late 1990s with Sandy Weill brought together the Citigroup by using Travelers to acquire Citigroup, and became like the first real financial conglomerate that everybody else followed in the subsequent years. It has been practically a train wreck ever since. So don't let this outperformance over the past year make you think that the gains are behind us now and you have to look elsewhere. In the big money center group, JP Morgan is always an excellent stock. Then it's well run. But if there's value anywhere in that group, that's it with Citi. If you go back, Citi is a laggard, as I noted. This is a 5-year history, and as you could see here, Citi is just a shade above Bank of America here. And if you go even further, like say 8 years, 10 years, or even an even longer horizon, Citi is totally a laggard in the group. And the company changed its management about 4 years ago. Jane Fraser, the current CEO, came on board. Citi historically has been this sprawling global franchise, with each unit in Europe, Asia, Latin America, and elsewhere being run as an autonomous unit independently. From there was duplicative in a very bloated structure, and they just simply weren't able to compete with the likes of JP Morgan, Bank of America, and Wells. And they have finally gotten their act together. Still early going, but they're getting there. To the valuation question, let me show you here how Citi shares are trading right now. This is on a trailing tangible book basis, which is typically the valuation metric analysts, sell-side analysts, and buy-side analysts use to value banks on. You could do PEs as well, but this is the more mainstream. And as you could see, the stock has had a pretty impressive recovery over the past year, as I showed in the performance chart. But look at how Citi looks relative to JP Morgan. You will be justifiably skeptical that JP Morgan is too high a target for Citi to catch up. But just look at the magnitude of the premium that JP Morgan has over Citi, and we're looking at a 10-year history here. If you look at forward-looking estimates of tangible. This is under par. Citi shares are under par, but the discount relative to J.P. Morgan is as pronounced in that comparison as it is over here. If J.P. Morgan is too pristine a stock for you to contemplate comparing Citi to, so let's look at Bank of America. And as you could see here, pretty significant premium that Bank of America enjoys relative to Citi as well. And you could go to Wells Fargo, even some of the regionals, the big regionals, and you will still see this valuation discount. So as I noted earlier, this has been a badly run franchise for a very long time. The turnaround has been in play for a long time, but the current leadership team that took charge about 4 years ago and put together a number of measures, operating measures, restructuring measures, repositioning measures that are starting to show results. And we are in the very early stages of that. As I note in the first bullet, restructuring, repositioning, sprawling global structure was bloated, was duplicative. What the new team has done is new functional teams across business lines that has produced visibility, it's more accountability, and there's greater expense discipline. The reason for the valuation discount relative to its peers has been the return on equity. So what I'm noting here is the return on tangible common equity is lagging its peers, and there's been an improvement, and management is laying out a pretty credible plan that will narrow the ROTCE discount relative to its peers, and that's where the value in the Citi shares is at a time when finance as a whole, when the market as a whole is this high, with true value opportunities so difficult to unearth and find. I think Citi is one of those that if you have a longer time horizon, at least 2 to 3 years, and start building a good, decent position in your portfolio in it, I'm very confident that you will come out. And this is the stock that I own personally, and also in a number of the model portfolios that I manage here at Zacks, I feel very strongly about. With that, I'll pass it on to Kevin Cook.
Thanks, Shiraz. My stock is Modine Manufacturing, symbol MOD. This is a century-old maker of heat transfer equipment. So they did cooling for tractors 100 and some years ago. Now they do cooling for data centers. Let's dive in. Here's the Modine homepage. As you can see, they're positioning as a environmentally friendly, cleaner company. And this is not just, a sales pitch to be green and eco-friendly. They are really in a position to make impacts, and I'll show you that soon. So let's scroll down and look at some of their business units. Oh, first, I want to mention, so I'm going to talk about Modine's earnings results. Came out on July 30th, and the stock popped nicely. The day before they issued a press release, Modine announces new $100 million investment to expand capacity for North American data centers. This was a key move. I think it contributed to the pop in the stock because they're investing to meet the huge demand for the AI build out. All right, so let's take a look at some of their core businesses: agriculture, construction, and mining. They still do cooling for tractors. That's kind of cool. Commercial indoor air quality. So they're industrial strength HVAC, the way we want to think about them, for commercial vehicle applications. And there's your data center cooling, which is the new big growth market for them. And it's so cool to see an old line industrial company, century old, find new markets in their expertise of heat transfer and cooling. Electronic mobility, they also do heating. Why not? There's your industrial HVAC for commercial buildings. So you can take a look at their homepage here and see. Oh, so the refrigeration cooling. This is one of the areas where they have a chance to make an impact environmentally, because traditionally these chemicals have obviously been not great for the environment or humans. So they're working on new innovations for safer, better cooling materials, technologies, chemicals, etc. Schools and educational indoor air quality and stationary power generation. All right. So I'm going to refer to an article I wrote about a week after earnings. I chose Modine as the bull of the day. And you can find it, just go, if you're on Zacks.com, the cursor always defaults to the quote box. Just put in MOD and the word bull, and you'll probably find this article easily that I published on August 8th. So data center segment, I said it's growing the fastest. It's probably growing faster than 45%. The new $100 million investment, we'll talk more about that. And, let's meet the 100-year-old expert in heat transfer that is coming in hot for the AI economy. So I give some background on Modine. They're based in Racine, Wisconsin. It's like my backyard in southeast Wisconsin. And strong beat and raise quarter. We'll look at the estimates. So they're investing to expand capacity. This was the headline press release I showed you before. They know how big the AI economy infrastructure build out is. And so they want to be a part of that. My colleague, Tracy Reineck, well, I'm going to show you her Twitter handle here. She's our value investor here at Zacks. She spotted Modine last year, bought it in the 40s, and has a big winner with it. And for her companies, both in her value investor and her insider trader portfolio, she's on as many conference calls as she can be during earnings season. She was on the Modine conference call. So a couple of highlights that I just took from her, because she was posting in real time on X, formerly known as Twitter. She said, Modine is working with a very important customer to develop a product that will get to the market faster for data centers. Let's see, they continue to win new programs. Started out slow in Q1, but it's ramping now, that 45% growth. Ooh, look at this. One large order in the DC area of 180 million. And analysts were asking, is there other business out there of this magnitude? The answer was yes. And that's why they're investing another 100 million. So, but Tracy noted that the company said, hey, we're sticking with our other core businesses that are still thriving, just pure HVAC, and Tracy commented that, analysts are still scratching their head, after NVIDIA started reporting these big quarters into 2023, how can this be real? Is this a bubble? Is this temporary? Is this a fad? And we know it's not. So I'm going to show you a slide from Marvell. Let's see if I can dig this up here. Marvell held an event, their AI event, back in June. And this is where they talked about the demand. Marvell is like a little Avago. They're not making the GPUs. They're making ASICs and custom silicon. They'll do whatever custom situation hyperscaler needs. So you look at the demand here. We've heard figures tossed around about 325 billion in CapEx from the hyperscalers. Now, when you hear hyperscalers, you want to think Microsoft, Google, Amazon, and Oracle. Oracle's not listed here, interestingly, and Meta, they're sort of building for themselves. So they're not building data centers for anyone else. But when you stack all these together, you got to put Tesla in there, Apple, Stargate is OpenAI and Oracle, and Masayoshi Son SoftBank. They're building like 10 data centers down in Abilene, Texas. There's OpenAI, there's XAI. You put all these together, and the demand, the CapEx build out for this year alone is getting close to 600 billion. It'll probably exceed it because this was before Google just bumped their CapEx by 10 billion. So yeah, we're already over 600 billion. And the reason this is important, you got to have Tesla and OpenAI and XAI and Meta in there, is because, what are they building for? I mean, Tesla and NVIDIA know that they're building the infrastructure for self-driving cars, humanoid robots, and autonomous machines. You need heavy data center infrastructure to train and run with inference those kinds of machines to make them safe and reliable to be in a human environment. Okay, anyway, so what's the big picture here? We go out to calendar year 2028, and we're looking at over $1 trillion in data center capex. This is, it's hard to believe, and that's annual. And this is not just from Marvell, who obviously has, their book to sell, but both Goldman Sachs and Bank of America have come up with similar projections that we will cross $1 trillion in capex in 2028. Okay, so look for the Bull of the Day article. Oh, the environmental mission I mentioned. So here's some of the things that Modine is in a position to do to reduce water and energy consumption, improve indoor air quality, use environmentally friendly refrigerants, cleaner running vehicles, lower emissions. So, it's not just a green, eco-friendly slogan for them. They actually have a chance to make impact there. All right, let's look at the earnings, the estimates, and how they're moving up. So this is the main page, the quote page. Notice 7.3 billion market cap here. Let's go to detailed estimates. Over here on this left-hand menu, this is where you can get just tons of free research and learn, just about any angle you want on a company fundamentally. All right, so scroll down here. We're on the detailed estimates page. We've got sales estimates and earnings estimates. This year, this fiscal year ends in March, growing 11%. They're going to crack 3 billion going into next year, which is a higher rate of growth. And that number will probably move higher than 15% growth. And then you look at our EPS estimates here, 14% EPS growth, projected over 30% next year. Let's see how the estimates moved up after the report. So before the report, 452 for this year, up to 463. And so that's why it's Zacks number one rank. They had a 14% earnings beat, and then estimates move up nicely, 560 to 606 for next year. So that's what's going on there. All right, I showed you that article. Let's look at the chart real quick and see what happened. So here was earnings on July 30th. We gap up the next day, haven't even looked down at that gap. Right afterwards, KeyBank raised their price target from 125 to 150. And just this week on Monday, they bumped it another $10 to 160. So this is how the market is reacting to this industrial player that's become a key player in the data center market, with obviously a giant total addressable market if we're looking at $1 trillion worth of capex build out in 2028. Hey, thanks for joining us in this week's Top Stock Picks. For lots more free research and stock ideas, check out this week's promo at zacks.com/promo. And we'll see you next week.